going to see the key participants in the stock market. In stock market, who are all really going to participate? We are just going to see in depth, because already I said you, after the IPO, it will go to the secondary market. After that, the price distributions and other things will happen. But really, who is going to be participate in that to make the price going up and down? We are just going to see in depth. So first peoples are retail investor. Who are all the retail investors? Here I just given very clearly the ordinary individual investors which they going to invest their personal money. See, I am an ordinary investor. I'm just having $50 monthly. I'm just earning $100. In that, I'm just going to invest $50. Means I'm a normal investor. I'm just investing my own money. I didn't got a loan or I didn't got anything. I'm investing my own money to to buy the shares, and I'm just having hope that future the company will perform good because they're selling a good product which I'm using day to day life or anything. It can be anything. So based on this, you just invested some money. So with your pocket money or with your personal money, they are the people who is going to be the retail investor. Next one is institutional investor. Institutional investors are nothing but who's like running their own funds, like for example, mutual fund, pension funds, insurance companies, even like for example, big banks also will do this. In some scenario, some banks even they will be taking the savings account money also, they will be doing this. So we don't know, like some banks are like that. So these people's are like they will use the people's money who is not having knowledge about the market. They will use their money and they will invest be off of, like instead of they are investing directly, they are going to invest inside the market indirectly, so that they are going to do the research. They are going to focus on the balance sheet and what the company is doing, whether this company is worth or not. They are going to check it, they are going to make it, and for that they will charge some amount of money towards the people. So that's people called as the institutional investor who has a huge amount of people's money to invest. So that's going to be the second people. And the third is hedge funds. Hedge funds are nothing but the private investment pools are nothing but, for example, I'm a person. I'm just having a lot of money, more than 1 million or something. What I will do is, instead of investing in business, I thought, okay, I need a more return. So what I'm just going to do is, I'm just going to give my 1 million to the hedge fund, and I will say, instead of me, you just trade for myself. So mainly, in like hedge funds will provide liquidity to the market with the HFTs and other things. But if you go deeper, hedge funds are going to trade in B offers. Like for example, instead of your trading inside the market, they are going to do it, and for that they will charge some percentage of the profit what they just made. For example, if they make 20%, they are going to take 5% from that. For example, in that $1 million, 20% is like almost $200K. In that $50K, they will take it as in you know the commissions and the profit sharing method, like whatever the method or whatever the policies they have, based on that they will choose it. And next one is market maker. Who is the exact market maker? Market makers are like, here I just given banks. Some banks or very big banks who has a lot of money left, they will be the market maker. But most of the time market makers are going to be the brokers. For example, you can take the crypto platforms or stock platforms. The platform provider is there, right? Platform provider is nothing but the broker. Broker is the real market maker, because only they know where the money is going, because they are going to earn a lot and lot of money, and they know the track of market flow, and they can easily access to the advanced terminal, which is going to be very faster than what we are using as a retailer. So brokers are going to be the real market maker who makes lot of money by providing liquidity. Same time, they would have some strategy inside to make profitability, but the main focus is providing liquidity. Because if I'm running a brokerage firm, for example, if I'm running an exchange or if I'm running a brokerage firm, what will happen is you need to provide liquidity to your customer. If you're not providing liquidity, what will happen? the customers are going to feel, oh my god, this exchange is not having liquidity, I'm just going to shift to some other exchange. So what broker will do is, because it's their exchange, so for not leaving you out, they will provide liquidity, in that they know exactly where it's going to move next with the money flow what you are just given. With that, they will make us penny profit, penny profit, or some scenario they are just going to make a huge profit if they have the nice strategy. But if you go with the market maker, their profit is very big. And stock brokers, stock brokers are nothing but who it's got the license and going to make. Here I just given, like based on countries I just given. If you go with the US, Fidelity, Nasdaq, so they all the stock brokers where they just run the market with huge amount of money. Even stock brokers are going to be the market maker because they have huge money to provide liquidity towards the market. So we get like both are same. And stock exchange, so like stock exchange is nothing but NYSE, Nasdaq, or BSE, or Singapore exchange, or anything. So they all the stock they are just stock exchanges where even they also buy stocks for their security purpose. Even they also will do. And the third one is regulators, and the next one is the listed companies. Even the companies also accumulate other companies. For example, I'm the Apple company owner, or I'm the Tesla company owner, but I feel like this Nvidia company is going to provide lot of chips that is going to help for my company. Then what I will do is I will buy some share, because I see that some growth is going to be there, because I'm also going to buy that product. A lot of people are willing to buy that product, so that product is having a lot of worth. So that company is going to grow in the future. So I'm listed company, I'm just going to accumulate a little amount of share, like 1% or 2% of share of this company, so that this company is growing, we can make additional profit in somehow. So that's the main thing. And next last one is analyst and advisors. Analyst and advisors are nothing but who got the certification to provide the advisory service to the people, like saying you people to invest on that, this is going to pump next, or this is going to be dumped next, or try to come out from that. So they all the analyst and the advisor where they are just going to be look deeper inside with the AI models, or with whatever things records they have. With that, they are just going to come to the conclusion what they can do exactly. So they all going to be like, these peoples are mainly be the participant inside the market. So if you are thinking overall going to be the participant, these are all the peoples. Okay, so don't get confused. Now we can come to the next part, where how a private company will be go to an IPO process, because IPO process is not easy. Like previous video I just said it in a easier way, but IPO process is not at all easy. It's like a very big process. First thing, they should have a decision to go public. The company board members would be there, company shareholders, investors would be there. They have to sit together, or they have to put the meeting to decide whether our company is going to go to public or not. If one person is like going back, then entire things are going to collapse. So every mindset should be same, so that the company will go to public offering. And what will happen is, after going to the public market, public will start investing, more capital will flow inside, they can make huge money. But if some investors would be there, they won't leave companies to go private. So that's the scenario. Lot of companies are, they would have a good balance sheet, but they won't be in a public market, because some investors and some co-founders or founders would have something like, no, I'm not going to public, I'm just going to be private, and I'm just going to use the fund which I'm just making profit, and I'm just going to expand that money. So some people would have some mindset like that, so we can't do anything like that. And next, after taking a decision to go public, you need to hire an underwriter, where investment bankers are who's nothing but they are going to for example, the Goldman Sachs, Morgan Stanley, they will hire a manager who's going to process the IPO. So whomever has been completed the investment banking career, or if you are in investment banking, very well what I'm saying. So they are the people who is going to pitch, or they are going to go to take the process to the next level, because the paperwork are very big to make your private company to public company. So on that price, they are going to work for you to do the paperworks and each and everything. And the third one is filing and getting approved from SECs. Like if you're in US, like SEC is going to approve. If you're in other countries, some sectors would be there to verify all the details, whatever you are submitted is right or wrong, whether this process are going to take into the next level or not, whether this company is like legitimate, or whether this company is really working good or not. Everything they will check with your balance sheet and with your tax filing, with the proper documentation, whatever you are just submitted, they're just going to verify everything. And then they are just going to go with a roadshow, which is nothing but the company executive present to institutional investors across the country to generate interest. So that what will happen is, if more people are really invested on that company, automatically you will get an investment. Next one is the price setting. Price setting will be, like when you go with an IPO, you need to evaluate what is your company worth, and how much fund you need for that, how much share you're going to sell, for that how much share value is going to be for each share. So for that, a different calculations and different kind of documentations are there. So that's going to be the next step, where price setting, because without setting a price for each share, you can't achieve the fund whatever you are just aiming for. If you set the proper price, if you set the proper price with the balance sheet or the profit making, whatever you're making, then you're going to get the fund, because people won't blindly invest on IPO. They will check each and everything. So that's the second, like a fifth step. And the sixth one is IPO day. When the IPO day is allocated, the shares will be sold out to the public. They will start buying it. They will apply to the IPO. After applying to the IPO, they will give the money. They will give the fund. When all the fund is given, then it will have a lockup period. Lockup period is nothing but it will be like 90 to 180 days. They will lock your fund uh, the trading day is going to come. Like the secondary market is going to come. They're just going to lock it. After locking it, what will happen is they will release everything. You will be getting the share in your account on the day when the trading day, or before one day of the trading day. And on the trading day, then that's all. That's boom. It can be go up or it can go down based on people's emotion, nothing else. Market is filled with emotion. That's what in stock market, in crypto market, in financial market, AI cannot be replaced. I will take this on some other video. It's like very big video. I will say on that. After that, after coming to the public market, everything is decided by people's emotions. If companies doing good and entire economy is crashing and people are scared to invest, then automatically company is going to go down. The price will fall down, because people is having trust on the company, but they are not willing to invest. So automatically they will take out the money, or they will be stop investing. So these things are there. We need to work on with that, because always a lot of people I'm seeing, they just blindly invest their money on IPO without checking or cross checking or validating anything. Don't do that mistake. It's going to be the big trap for you. Okay, so this video will be more and more helpful for you. We can see on the next video.